Hello, hello. Welcome back, everyone. I wanted to introduce Christina Van Hooten, a good friend of mine who's going to be on this panel. Also, Jess Toy. I will start by letting you introduce yourself, Christina.
Sure. Hi, everybody, and thank you so much for letting me be a part of this great event. And I know it's the first of what will be a whole series of great initiatives. I I've gotten to know TJ over the last year almost, and I grew up in Tulsa, but I live in Boston now. And I started out. It's so interesting to hear you guys who are entrepreneurs talking about your the agony and the ecstasy of all of it. I initially started a women's athletic apparel brand before I randomly landed in enterprise software about 25 years ago. I'm an old fart. And my experience as a funder and initially was IBM and other large software companies, running product and eventually also M&A and corporate development as part of it. And that included smaller deals and bigger deals. And so I've been on kind of both sides of that. And then most recently, as I'm transitioning to what a lot of people call the third chapter of their life, and I think COVID did have all of us kind of looking at your raison d'etre, or why am I here, and who do I want to be, and just really a return to my passion around community and economic development and entrepreneurship and all the things that enables. So I've been focused on that as an angel investor, and really just trying to figure out how I can get engaged with founders in different ways, and not just. And I think the comments about like stop the mentoring and write the check is just so good, because it is really true. There's just not enough people putting their money where their mouth is, and so I think trying to figure out how to create consortiums and fortified networks that wouldn't otherwise exist. Like I my network expanded exponentially this year just by doing a couple of things differently, and that's just given me so much, including my friendship with TJ. So um, anyway, that's a little bit about me.
Thank you. Thank you. Jess.
Hi, thanks y'all. Nice to meet you, Christina, and thank you so much for having me, TJ, and all the other speakers. It's been amazing. So I'm Jess. I'm currently the Director of Product at AngelList Venture, which, if you're not familiar, is basically a product that helps make angel investing easier, makes it easier to run a fund, basically just makes investing into startups easier all around. And so I've been there for about 2 years, and prior to that have been in product at a number of other marketplace companies. So Airbnb, Ease, and Freight Marketplace. So I've kind of been in the marketplace realm for a while. And I guess 2-3 years ago, just started getting more interested in venture, wanted to understand what it was. I worked at venture-backed companies, but really, like, I honestly, truthfully, I don't think I even realized that venture capitalists weren't investing their own money. I didn't have a concept of like angel versus like a firm, and I just thought it was a bunch of rich people making investments with their own cash. So I got really interested in venture, and I kind of just wanted to understand more about how it works. I thought, okay, if I hate venture, the worst case scenario is that I've just got a much better idea of how the startup ecosystem works and what this weird little game is that we've all created. And especially, like, as a lesbian and as a woman, I'm like, I want to understand how that game is played. I'm working at these companies and I don't know like all the little chess pieces that are getting moved behind the scenes. So I've really enjoyed that. I do think that, women being in charge of more of our money, underrepresented people being in charge of more of the money, where it's going, that has a huge impact on what companies get founded and how we move forward. So I've absolutely loved my time at AngelList Venture, and kind of getting to see behind the scenes, and just feeling like I'm more a part of all these different companies. So yeah, and then outside of that, I'm very passionate about personal finance, and live in Oakland here with my wife.
Lovely. Lovely. Thank you so much. And I'm so glad that you're both here, because I want to Well, I just started investing. I have my AngelList account, and I'm a part of a few different syndicates. And right now, I'm in the learning mode before I start deploying capital. And I think that a lot of our attendees and a lot of the women here are probably um, starting that journey of becoming an investor. And so I wanted to learn about your experience on the venture side, but also Christina as an angel investor too. So let's start with you, Christina. I'd love to know about how you evaluate deals and what your experience has been as an angel investor.
Yeah, this is very cliche, but I think people invest in people. And so for better, for worse, I think that's in some ways why that the problem has been perpetuated, because it's like in this echo chamber of people who kind of know each other. But it's human nature, I think, when you're thinking about, especially making a direct investment, you want that interpersonal connection, and you want to feel like you believe in someone. And there's a saying that, great ideas are killed by mediocre people, but mediocre ideas are really, brought to life by amazing people. And so I think sometimes, as much as I love the discipline of data and really analyzing business and making sure the financials make sense at some level, and that somebody's really thought through pricing strategies and the market they're going after and all that kind of stuff, I think in the end, as squishy as it comes down to a belief in a person and just their passion and because all the things that you think are true at a given point in time about a business and what you want to do, the only thing that's certain is that it's going to change, and so it's really about seeing someone's ability to weather that storm and be tenacious, and especially in the sort of very early stages of a business, where you're making a seed investment, whether it's $25,000 or a smaller, something under 100. Most of mine have been kind of 25 to 50. But even just started, I think also for those of you that are raising money, I think one of the things, it's just so interesting to think about how this all looks different at different phases of a company, at different phases of your life cycle. And so I think early on also figuring out, this is all hard to do, but really trying to get your head around, I think it was Talia who was saying, it's so clear in her mind how the movie's going to play out for her, how big this company is going to be. And that is just so, and Lauren's passion too. Like, I just think that is just so energizing and contagious, and in the best of ways, because that's what will get her there. And so, but I think, so that's, I don't know if that answers your question, but I think especially early on, it is that kind of interpersonal connection more than numbers or any other traditional approaches that I'd look at.
Yeah. That's kind of actually, Jess, how much does the founder and their story and you connecting with the founder, like how important is that on the venture side?
Yeah, well, so, as an angel investor right now, like you, I generally use AngelList. I don't have a personal brand that's big enough that like a bunch of founders are coming after me to try to get direct investments. And so like, I definitely look at the founder from does this person seem uniquely situated and uniquely poised to be able to solve this problem? And do they have some sort of track record, or what indicator do we have that they're going to be successful? So I think that plays a huge role in, deciding what to invest into. But that said, there's a lot of other pieces that go into it. But yeah, I think the team fit is huge. And do they have a technical co-founder if it's a technical product, right? And things like that. So, and then on the venture side, or from a VC firm, I think huge, right? A lot of times VC firms are just betting on a founder based on their track record, which may or may not be a good idea, but I think that's crucial. And some people think that despite whatever the market is or what the product is, if it's the best founder, they're going to figure it out and pivot. So I've done a couple of like pre-seed investments like that, where it's like completely changed what the product actually is, but there was so much faith in the founder. I will say for myself as well, I'm heavily going off of like co-investor signal. I don't presume to be better than, a firm or better than some seasoned solo capitalist. And so that's a big thing that I'm weighing as well, is like, okay, I've got access to certain deals. How do I weigh what access I have, and then how much time am I really going to spend doing due diligence on these? If Sequoia is already investing, or if or Ryan Hoover's investing, like, do I have more knowledge than them? So that's a big thing I've been kind of like trying to work through personally, and actively have actually been trying to shift some of my investments into specific deals into funds. Which is kind of the opposite. I think a lot of, because really the way you should start is you should start by investing in a fund, investing into like a diversified portfolio. It's much safer. They're working on making sure the returns are, hitting certain numbers. But sometimes it's really hard to get into those funds. So I've actually been treating, doing syndicates and doing SPVs as a way to build a relationship with the fund manager. And then when they actually have a fund that opens up, then I'm able to get into that. So that's a weird way to go about it. But I think even from like a cash perspective, it's a lot easier to have, $1,000 that you can invest here and there into different deals. It's a lot harder to be like, yeah, I've got $25,000 to put into a fund or whatever the minimum may be. But that's really how I'm starting to try to shift. We put out some really interesting data at AngelList on, how investments perform. And if you miss the best performing seed investment, you will eventually be outperformed by someone that just blindly invests in every credible deal. So I try to keep that in mind. I'm like, am I going to be some deal evaluating genius that's going to outperform Ryan Hoover and Sequoia and Google Ventures or whatever it may be? Or should I just take the fact that I'm even getting access to this deal as like, great, I'm good to go. Let me just spread this across enough and then try to get into some funds. So that's kind of the approach I've been taking on that front. I feel like that got really far away from your original question, but
no, that's awesome, because that's kind of how I've been viewing my investment opportunities and the deals that are coming across my desk too. Is like, should I, because I'm, like you said, deploying like $1,000, I think is the minimum investment for a lot of these deals. And it's like, am I going to wait for the perfect opportunity, or am I going to like one deal that I don't think I'm supposed to talk about it actually, is the lead on it was Mark Cuban. And I'm like, Mark Cuban is a pretty successful and smart guy. So if he's if he thinks that this is a good deal, then there goes my due diligence and the other factors that are going to weigh into my decision. I can spend more time on those. So
exactly. Yeah, I think that's right. It's like there is such a huge part of understanding what you're doing, and it takes time to understand and even understand like who is a good co-investor, what is good signal. Not every venture firm or every angel investor, is great signal. And you have to think too about what their risk profile is and what their other investments are. But on the whole, if you were to back everything that Ryan Hoover backed or everything Mark Cuban backed, like you'd probably be okay. But you'd also have to keep in mind you don't have access to every deal. So that's how I'm doing my angel investing, is like it's all about access and then spending more time in it and realizing, whoa, this is actually like, for instance, I'm in the Airbnb alumni syndicate, and I realize now, okay, that is a huge privilege. I should be sequestering, like siphoning off the cash I want to invest and putting it primarily in there, because they're getting access to deals that a lot of other people aren't. So I think that's the real thing that's come to mind for me is, okay, recognize when you're in something where you have asymmetrical information or you have access that other people don't, and that's where you funnel your money. Because at the end of the day, if this is not your primary job, how the hell are you going to like really review it and actually know? You don't. And even if you did, you would still have no idea, so.
One thing that Miles was kind of talking about, and I think it's such an interesting topic. It's like, how do you get over, especially when you're making direct investments or you're really starting to on your foray into this and getting comfortable with the idea that you're going to lose money. I mean, we all are in a position in different points in our life that you're going to lose money. But like, even for me, until the last year or so, when I was investing in stuff, it was with somebody else's money, and so for the most part. I mean, occasionally I would do something, but it is a very interesting thing to try to socialize yourself through.
Mhm.
And I can't remember who was talking about this in the first section, but it's also so interesting having been part of kind of a traditional structure and see behind closed doors and how like where do these guys get this bravado? It's so interesting to see, and you think all the women I know are so much brighter and we're working harder, and so it's really it is like this lack of within myself. Like I was just in a meeting the other day with a bunch of guys who I thought, I cannot believe this conversation. Like this is one of the most basic.
Mhm.
And these guys are going to get funding from this bank, and I just
Mhm.
think, wow, like every woman founder and business person I know would run circles around these guys and would not be tolerated in the same room with these bankers, the way that these guys were. And so it really turbocharged me into thinking like there's an opportunity, I think, to really catalyze a movement around the psychology of this stuff. Is just exactly what I think you're doing here. And one just concrete thing I'll say that has really been interesting for me just in the last year as I've tried to really become more active as a direct investor is there's a platform called Next Gen Venture Partners. Um, it's led by a guy. It's NG. They have an acronym NGVP. If you want to Google them, but it's like a democratized venture funding. It's both. It's sort of a marketplace that brings together founders and funders. The guy who's organized, I think, has done a really nice job. I can be involved in any due diligence, like they because I've spent a lot of time and with product areas that a lot of people maybe haven't. I can be voluntarily part of due diligence meetings, and it's kind of good just on that whole journey of kind of getting steeped in the psychology of all this. I think if you can become part of something, just say yes to all of these things, like being part of a platform like that just where you see how people are presenting their own business. If you're
Mhm.
pitching, even if you're a founder, the more you can see other people um, give their pitches, the more, if you're a funder, the more you can see kind of how other people make assessments, the questions they're asking. That's been really helpful to me, even though, again, I've been working in tech for a long time, but there's still so much that's new. So I don't know if that can be helpful to anybody here. And if anybody wants a referral to be engaged with that platform, I'm more than happy. I think you usually have to have somebody, suggest you, but I'm more than happy to have anyone here suggested for it. And they're very eager to have very rich diversity in terms of women and people of color. So, and many of they're on Fund 3 now. And so this is not, and what's nice is this is not a pitch competition, so I think that might be a really interesting route, in addition to what we build here,
Mhm.
for a lot of people that are engaged here.
Yeah. This is something you said that's really interesting. You were talking about how these mediocre guys are getting funded, and Jess spoke about how uh, investments are just bets on the founder. And I think that this is probably true for a lot of the women in the audience here, but I had the exact same experience. I was seeking funding for a new venture. And this was after I had a successful exit. I had founded a company and I grew it to $36 million. I had receipts and I couldn't get money. And so it's just, it was interesting to hear that. I'd love to get to some of the questions from our audience.
Yeah. I started commenting on this one so I can jump in. So I think Twitter is a great place. It depends on how active you are on Twitter and how big your following is, or what, how far your tweets can spread. But I've seen a lot of people tweet and be like, hey, we want more women on our cap table, like DM me if you want to get involved. So I think that's one way, maybe not the easiest way. Some people don't want to use Twitter, but the reality is there's a lot happening on Twitter. Like Christina mentioned, there's also a bunch of different groups. I'm in a variety of different Slack groups that are for women in venture, but a lot of those I find on Twitter yet again. So I do think it's worthwhile to spend time curating your Twitter feed and following folks. And if you find somebody interesting, go and look through who they're following and just start to really curate your feed, because there's so much venture happening on Twitter. The other thing to keep in mind is like kind of what we've all been talking about. You know, a lot of women can't afford to go directly on the cap table yet. We're still working on building that wealth to be able to put in 25, 50,000 checks. And so a big thing is just being able to find a fund or a syndicate that has a lot of female LPs. And that's not exactly the same thing, right? Their fund is going to be on your cap table, or their syndicate is going to be on your cap table, not, you know, some woman's name. But within that, if they have a lot of women and underrepresented LPs, that is one way to go about it, because then those people have, you know, $1,000 or 2,000 checks, and it all adds up to a bunch of people. So I think that's another thing. It's like, how do you find those folks? I put a link in the chat. Angels is a group of people basically where they are focused on underrepresented LPs. Everyone Capital is another. I'm sure there's a lot, but yeah, effectively you've got to aggregate some of those checks right now. You know, until I don't know when it is that we're going to have more money or be willing to put that in there. And I think that kind of backs into this risk question too that someone else asked about, like, how do you determine what level of risk you're comfortable with? I mean, it totally depends on your personal situation. I think this goes back to the like education. Yes, we want to know what we're doing, and like we should be educated about what we're doing, but so much of this is literally just your emotional comfort level with doing this. I mean, it starts with the public stock market, right? And even myself, maybe 4 years ago, I started thinking, okay, I want to start investing more. When I find a company I'm interested in, I'm just going to put $100 in it, right? I probably could have afforded to do a lot more than that, but I wasn't used to doing it. And then over time, you get used to seeing that money go up and down and up and down, and you're like, okay, I can deal with this. I can deal with the emotional stress of it going down, which people generally don't talk about, despite the fact that it is very emotional. And then over time, I'm like, okay, now if I feel conviction in a company, I'm comfortable putting 500 in, and I can deal with it going down and understanding that over time it will come back up. And so that's also the key piece, I think, of educating people earlier. You can talk about it and talk about it and talk about it, but until you put your money on the line and get used to seeing it go up and down, you're never going to get more comfortable. So it's like you have to learn by doing with this, which is hard because it requires capital. But I just haven't seen it either way. Like, I'm still personally working through it. I'm in group chats with a lot of, you know, of my male friends, and we'll talk about an investment, and then 3 weeks later, they'll be like, oh man, I'm down like $10,000. And I'm like, how much did you put in? That's what we're talking about? I was like, I was putting a couple of $100. I had no idea you were doing that. And like, that's happened to me over and over again, where either I'll suggest something and someone will make way more money than I did because they put, 10 times the amount I'm putting into it. But I mean, they've been talking about it with their friends for so much longer than we have at a younger age. Like, the whole rhetoric, the whole narrative is around saving. So when you talk to women, I think that is actually changing quite a bit with Gen Z because of access to Reddit and things like that. There's more conversation happening from what I can tell. My sisters are much younger and they seem to be more comfortable with it. But yeah, I don't know. I think it's just so personal with the comfort level, and you just have to start small and start getting used to it, which is not fun, but reality.
Yeah.
This is a little bit off topic, but one thing I just want to make sure that I get in before we move on is, and I would love to know more from the founders that were earlier, how they're doing this. But I think that the early stage people that you pursue relationships with and end up being part of funding you, as important, I know the money that they give you is important, but I think even more important is the starburst effect that they can create for you with their networks and also their expertise. And you know, I think if you can find people that really, especially if you're very thoughtful about your advisory, you know, either your real board and or your advisory board, which usually means giving up, you know, some level of ownership to have advisors, you know, as part of a group. But if you can put together kind of a magical mystery, amazing group of just very different, but complementary. You know, you picture a Venn diagram, you know, with some overlapping but distinct things that they bring to you, whether it's domain expertise or sort of tapping into a different network. I know we haven't talked about, or we didn't have a question that directly addressed that, but I think for people starting companies, that is, especially if you're alone and you're not part of kind of a group that's doing it, I think that can just add, it'll feel like a part-time team for you, but they won't be competing with you. Like they will be right there in the trenches, make calls for you, help you figure things out. And it can save you a ton of money at the same time that it can open the aperture of the money that you have access to. I don't know if that makes any sense. So.
I think that's so important, Christina, building your team of trusted advisors, especially when you're, you know, kicking off something that's new to you. I also really loved what Jess said about like just getting started and starting small. My friend Libby invited me the other day to a deal that she's heading up through WeFunder. And this was something that was new to me. And it's a site where you can invest and you don't have to be an accredited investor. You can invest as little as $100 and you don't have to meet those, the barrier for accreditation. And it's nice because it gets you started earlier and it gets you involved in, like, you know, getting acclimated to the stresses, the highs and lows, the peaks and valleys of investing. So I love that. Do we have any other questions? Let's see.
Yeah, on that note, republic.co is a really good option for non-accredited investors. That actually spun out of AngelList a while back. And actually, if you're familiar with Arlen, who was Backstage Capital, Arlen Hamilton, she actually raised through Republic. I actually don't even know how that all worked, but you didn't have to be an accredited investor and you could get into her fund, which is really, really compelling. So I think they're doing some really interesting stuff there.
Wonderful. Let's see. Okay, so as I'm going to read this question, as an industry professionally turned first-time founder looking to market my product outside of social media and getting my product seen on a larger scale, how can I do that if I'm a creative without a team? Solopreneurs, I feel your struggle.
Yeah, this is a hard one. I think there's so many opportunities, and it kind of goes back again to a little bit of the advisory board point I made earlier, and really figuring out how you can create channels that aren't traditional to figure out, especially in early days and very focused ways, on how to open up sort of the opportunity to achieve a proof of concept and a starting point set of numbers and engagement that you can then use to do the next sort of phase of funding and the next phase of marketing and those kinds of things. It depends. And unfortunately, I don't know what the product is or the offering that you're talking about, but if I love thinking through stuff like that, and not that I may not be able to be helpful, but if I can be, please reach out to me. I'd be more than happy to brainstorm, depending on what the product is or offering, how if I have any ideas or if I have other people who might be able to help in some way.
You need people like Christina on your team of trusted advisors.
On the revenue side, yeah. I don't know. But I'm always, I'd love to help if I can. But if I know more about the product, I could maybe help. Thank you.
Okay, from Kiore in Tulsa. How do you accelerate the curve of learning? How do you evaluate a deal from for the financial return? The financial learning curve feels steep. Are there investors who are only good at 2 to 3? Founder, product, financials. Evaluating a deal for financial.
Jess, do you want to take that first, or do you?
Sure, I can try. So I think the question is, like, do you have to be good at understanding the financial return, or can you simply focus on like founder fit or the market? I think so. I mean, the thing with the financials, I would say I personally don't have a lot of expertise in that area. Part of it too is just understanding, okay, is this valuation reasonable given like the, you know, this series or this size of the market, which I think it takes actually a lot of time to really understand. And also in the current market, I mean, valuations are crazy. But I think depending on whether or not you're angel investing or you're, you know, making decisions for a fund, these are really different. If you're doing investments out of a fund, for every investment that you do, you have to be pushing for it to effectively be, you know, 100x returns, so that your portfolio balances out. If you're just doing angel investing, right, getting 2 or 3x is already way better than you're going to get in the public market or something like that.
Mm-hmm.
So I think that's the other piece is like, what are your actual goals? If you're running a fund, then yeah, you definitely need to understand exactly how it's going to play out so that you're, you know, actually able to provide your investors with the right return. But if you're doing this for yourself, you know, I think the real wealth creation is just coming from the fact that you're getting in much earlier. So would you be a better investor if you understand the financial return part? Probably. But I don't think that I don't think that has to hold you back really, as long as you understand the signal, and are getting into deals that are reasonable. So that's my thoughts.
Yeah.
So I was trying to figure out if the questions from the perspective of evaluating a company as an investor or thinking about as a founder your own financials. I think either are really good questions. And on the founder side, I really think even though sometimes very early financials feel squishy because there's so much you don't know, I think it's still really worth that rigor and particularly around. I find pricing and packaging to be incredibly interesting and difficult. And so, but I think that's so core to your financials and the reasonableness around how that's all going to play out. And so I think that spending some time on that is really worthwhile. And then on the investor side, I think it's good to look at, you know, Jess was talking about, I think, TAMs, and it like every major pitch deck will have some insight into a total addressable market and then a growth rate, which is very top down and may not mean something, but it is nice to know you're part of a market that is moving, you know, and growing. And then in terms of your specific role in it and how I think your financials are really great when you're evaluating somebody's financials. It's more to see how they are thinking about things as opposed to the, you know, how exactly accurate that is all going to be when it plays out. It's more sort of just gives you a sense of how much rigor they've put around the thought, you know, and what they're building.
Yeah. And I think first off, sounds like you're a lot more diligent than I am, which is not surprising for me. But I think we may be in totally different boats too. I'm going into deals where there's so much signal ahead of time. There's these co-investors that have gone into it, other people that have reviewed it. And so then when it comes to financials, I'm like, well, there's no way I'm going to know more about the financials and the TAM than these folks. But if I was first money in or founders were approaching me directly, then yeah, I would really want to understand the financials. But I have not put myself in the position yet to be on the hook as much for that. Which I think is fine, right? And that's where you start. You start somewhere where you're just getting access. You've got signal from other people. Maybe you don't understand every other detail. And then over time, you understand that. And then maybe you could be in a position to be the first money in or making those decisions before you have signal from other folks.
Yeah, that's great. Somebody asked about finding an accurate TAM. So this is so not scientific, but I think so sometimes you're going to be in something that is a really defined space and it's been around there for a while. Like Talia was talking about, is she going to define her TAM as the health and wellness space or the floral industry? And I think that's really brilliant that she was defining herself in terms of a solution base instead of a product base. I love that in general. It just says so much about how she's thinking about her business. But it's funny because there are times though that when you are going solution focused, that when you're looking, you know, you start Googling for what's the market size of this or what's the market size of that. Because I've been working on a startup as well on a technology platform, and it doesn't really fit cleanly into any of these spaces. And so I was just working on an investor pitch deck yesterday, actually, And we ended up pulling like 3 or 4 different spaces because it was sort of this intersection. So I don't know who has the question, I think, around, I think it was from Blondery, but I would be happy to kind of help you think through what the market space is, and then where I've found stuff, if that could be helpful on figuring out the TAM, and then kind of what you think, what your role is within that, based on what I've seen other people do and what I've been trying to do myself too.
Awesome. Awesome. So I'm just going to pose a last word to you, ladies. I feel like the majority of this conversation, the root of it is around financial literacy. Some women don't understand the rules around investing and the impact it has on wealth opportunities. How should we all be approaching what we don't know?
So I'm really curious about your thoughts on this. I think one of the things that a lot of people, and TJ, you and I were talking about this at my house, actually.
Mm-hmm.
One of the things that has I'm on a public company board, and also just involved in, investing in a couple of things. And the thing that is a lot of people don't realize is taxes. So it is a wealth generating opportunity, and it takes guts, and it's worth doing, totally worth doing, and getting engaged. If you are in a position of investing and then also being an advisor to company, a company or set of companies that interest you, and that gives you a lot of, you feel better about the risk you're taking, because you're more integrally involved in what's being built. But the important thing to think about, which has really blindsided me, and I'm on the audit committee of a public company, is the tax implications of what you end up doing, because a lot of times you're putting money in, and it's not liquid. Like, these things are, you're not going to see money for a while, but the IRS is going to come calling. And so just to make sure that, there's wealth and then there's cash flow, not just in companies, but also, for us as individuals. So it's just good to get steeped in that. And it can be really hard. And so, like, in the green room, TJ and I were talking about this a little bit. As part of Funded by Women, I think it would be so neat if we ended up pulling together a consortium of advisors who are available to these two founders and funders, actually, like a really strong private equity lawyer who knows how employment agreements are done and how deals are structured, and it's this kind of company or that kind of company, an HR leader on the employment side, all of these things. I think that even the founders earlier were saying, God, there's all these things I have to do now as a founder that have taken me away from what I love the most. So I think the financial literacy thing is it's really complicated, and it's an ongoing journey, and you're going to need different things at different times. So I think if we could, just as a concrete follow-up, I'd love to see this org, or, you and I together, TJ, somehow kind of think about how to achieve that, because it would really be, it could be, I think, a really powerful foundational thing for just fundamentally changing this whole environment.
I agree. And thank you for talking about taxes too, because that is something I think that people that's not at the forefront when you're thinking about investing. So it's a really good point.
Yeah, that's a huge point, because every syndicate investment you make, you will get a K1, not every single year, but many years. So it can stack up really quickly. The other actually interesting thing to think about with taxes, I'll throw in there, is that you can invest in venture with your IRA. Now that could be risky, but it's also interesting because if that money is you can't touch that money anyway. So when we're talking about liquidity and not having any, you don't have liquidity in your IRA anyway. So it can be an interesting component. The only thing is you can't re-up your IRA, right, from previous years. So it's best, I think, to make investments out of that are later stage, or maybe you have a little bit more conviction on and aren't likely to go to zero. But yeah, that's one way to think about it. It's like, if I'm going to put $6,000 away every year anyway that I can't touch, maybe that's what I should be putting into venture instead of my, So we have an IRA integration on AngelList. You can also use Alto IRA. Anyway, that's a quick tax thing. I actually haven't started doing it, but it's on my mind. I'm like, I think I should be doing that. But yeah, on the financial literacy stuff, in terms of thinking about what we don't know, I mean, we've talked a lot about education. I just put a link in there too to our education center, which we're continuing to build out. But I think the main thing is just this comfort situation that we talked about. It's talking to your friends and family that are women about money, even though it's uncomfortable and other people don't want to talk about it. I actually started this newsletter with my friends. You know, it's like 20 or 30 people, but I just started sending them a newsletter like once a month, basically called, it's like the newsletter that literally no one asked for, where I just push financial information on them that they're not asking for and try to make it kind of fun. And sometimes people respond, sometimes they don't, but I'm like, all right, they've spent the past 4 years hearing me talk about this, right? And I think that's a big thing, is just us all being part of changing that narrative and not, you know, I don't want to keep having to talk to my friends' husbands about financial stuff. I want to talk about
that is so awesome that you do that. A few years out of business school, actually, when I started Women at Work, one of the things I just felt like this was so intimidating to most people, and it could and should be demystified. And so I wrote this, what is now the most boring curriculum. I call it the One Day Mba. But I tried to do, because I had these epiphany moments when I was in business school, where it was so daunting and intimidating. And then there'd be a moment where I'd say, oh, that's what this whole concept is. And then suddenly I saw it everywhere in the world, like the whole concept of efficient frontier and portfolio optimization and those kinds of things. So Jess, I have this One Day Mba sitting on my hard drive, and it sounds like you figured out how to make, I mean, you probably don't need my core content, but I've left it there mainly because I think it's just too boring, but I still think the idea of a One Day Mba is just so powerful, and we could kind of have a couple of different ways to consume it. I think your newsletter just sounds so brilliant, but I'll send it to you.
It's a real mix of content. It's like Robin Hood launched fractional stocks, and Sean Spicer is shit talking Dippin' Dots. So things that
I want in. I want in. Everybody bombard Jess with requests.
We'll see. Yeah.
Thank you, ladies, so much for sharing your time today. This has been a really wonderful conversation, and I hope that we have an opportunity to continue this conversation in the future. Christina, Jess, thank you so much.
Thank you.
Thanks, TJ. Thanks for letting me be a part of it. It's nice to see everybody here today.
Yeah, really appreciate it.
Take care. See you soon.
Bye.